Could you please go through the question?
Yeah. Diksha and Padmaja are in partnership. Their financial year ends on 31st July.
Mm-hmm.
The partnership agreement provides for
Mm-hmm.
interest on capital 4% per annum, the
Mm-hmm.
annual salary of 4,000 for Padmaja, interest on drawings at 2.5% per annum, residual profits and losses to be shared in the ratio of 2:1.
So,
The
so,
following,
so these are the actually points mentioned in the partnership agreement,
yes,
right? That and these points shows that how they are going to allocate the profits,
yeah,
right? So first, from profits, what they will do? The firm will allow them interest on capital. Then firm
4%,
will give them salary. Okay.
yeah.
After that, the firm will charge interest on drawings. And
Mm-hmm.
after all these 3 points, whatever profit left, that is known as actually residual profits. And,
Yeah.
and that will be shared between the partners in which ratio? 2:1
Choose
ratio. And if this ratio is not given, in that case, we will share the residual profits in equal ratio. Okay, in equal proportion. Got it?
Mhm.
Now see, the following information is available. Okay, for both the partners, Diksha and Padamja. So what is the capital on the beginning date?
50,000 from Diksha and 40,000 from Padmaja.
Okay, and what is the status of their current account on the beginning date, 1st August 2004?
Four 4,200
Credit
credit
balance
balance
for Diksha
on the
and Padamja 200 debit balance, right?
balance. Yeah.
And we have information about drawings also. Diksha has withdrawn $3,000 and Padamja has withdrawn $5,000, right?
Yeah.
And what is the status of the profit?
Uh, the profit is 11240.
Yes, the profit for the year ended 31st July 2005 was $11,240, right?
Yeah.
Okay. Now, what is the first requirement? What they are asking?
Prepare the profit and loss appropriation account for the year ended 31st July 2005.
Okay. So first, let's see the appropriation account. So let me draw the format and let's see how we will update the appropriation account. So first, always we will take what profit figure. What is the amount of profit? So let me write here profit. How much? $11,240, right?
Yes.
Yeah. Now see how we are going to allocate this profit between the partners. And we need to follow the points which are mentioned in the partnership agreement. So the first point states what? That
The
firm
first one,
is
interest
going
on
to,
capital.
yes, firm is going to allow them interest on capital. They invested capital in the firm, right?
Yes.
Right. Now firm will give them interest. Firm will allow them what? Interest.
Yeah.
Okay. Now firm will give interest, so profit will increase or decrease?
Uh, it will decrease because
Because
it's an
they
expense. It's an
because
expense
they
for the,
yeah, because they invested capital, now firm is will give them interest on that capital. So that will
yeah.
reduce firm's profit, right? Yes or not?
Yes.
Less
Yeah.
interest on capital. So who are the partners? Diksha, and D stands for Diksha and P stands for Padanja, right? So see, what is Diksha's capital? 50,000. Yes or not?
Yeah, 50,000 would be
And
fine.
on this,
4%.
what is the rate of the interest? 4%.
4%.
So that will be the interest on capital. So we should mention that also here. That Diksha's capital is 50,000 on that 4%, right? And Padamja's capital is actually how much?
40,000.
$40,000 and on that 4%. So 40,000 and 4% will be, let's see how much? 1,600. Clear?
Yeah.
So total how much amount I will allocate as interest on
30.
capital? 3,600. It means out of 11,240, $3,600 is utilized.
Yeah.
For in what purpose? To
In
allow interest on
interest on
capital.
capital.
right? Now what is the leftover profit? $11,240 minus 3,600. So the remaining profit is $7,640. Clear?
Yeah.
And we have followed this first rule. First rule is done. Now what is the second rule?
An annual salary of 4,000 for Patanjali.
Only for Padamza. So again it will reduce the profit, right?
Yeah.
So salary to Padamza. Padmaza, Padamza. And how much amount?
4,000.
4,000. It is yearly. Okay. Sometime it may be given like monthly. So in that case,
Okay.
we have to multiply the monthly salary with the number of months in a year, right? Okay. After allowing salary to Padamza, what is the amount of leftover profit?
3,640.
Yes. So this is the profit left now. Now third
Yeah.
point. What is the third point?
Third point is interest and drawings at 2.5% per annum.
Now drawing means they are utilizing firm's fund, right?
Yeah.
So
So they
firm will
have to pay
charge
this.
interest, so they need to pay now that.
Yeah.
So interest on, so that we will add interest on drawings because they used business funds. So firm will charge interest on that drawings, right?
Yes.
So that is kind of earn income for the firm. So that's why that we will add here to the profit. Clear?
Yeah.
Diksha and Padamza. Can you tell me Diksha's drawings how much?
Uh, 3,000 and Padamja
And
is
it's
5,000.
2.5%, right?
Yeah.
So let's see 3,000 and it's 2.5% is how much? $75. Okay.
Yeah.
Now what about Padamja? 5,000 and it's a 2.5%.
Yeah.
So 5,000 and it's a 2.5% will be $125, right?
Yes.
So total actually it will come around $200. So that we need to add it to the profit. And after that, whatever profit we will get, that will be known as residual profit. So 3,640 plus this 200, it is residual profit, right?
Yep.
Residual profits. Now this residual profit, again, it will go to whom? To partners only.
Yes.
Are you getting my point?
Yeah.
And in the given ratio, here in the question, what is the ratio given?
It's 2:1.
So that ratio we need to follow. So distributed in 2:1 ratio. Right?
Yes.
So let's see, Diksha will get how much and Padamja will get how much. Diksha, can you tell me? This is the profit and the ratio is 2:1, right? So 2 by total of ratio is 3. Clear?
Yeah.
So Diksha will get this much.
Mm-hmm.
And what about Padamja? Profit is this much and it's a 1 by 3, right?
Yes.
So that is the share of profits for whom? Padamja.
Mhm.
Clear?
Yes.
So this is how we will be preparing what? Appropriation account. Tell me any doubt so far?
No.